Hi everyone, welcome to the panel. We have a great discussion coming up on the topic of buy now, pay later. Very topical at the moment, lots we're going to go through in terms of what's happening in the market at the moment and also talking a bit about the future for buy now, pay later. So joining me on the panel today, we have Surin from Mastercard, Dion from Openpay and Myles from Payright. Thank you all for joining me today.
Thanks, Kate.
What I might do before we do jump into the panel discussion is just get you all to introduce yourselves and your role. So Surin, why don't we start with you?
Sure, thanks Kate. I've been at Mastercard for a number of years now, leading our products and innovation business, which also includes our buy now, pay later work stream. And we'll talk a little bit more about how we've leveraged our capability and our technology to support the vertical and the growth in that vertical. I also look after our key initiatives, including our open banking and blockchain capabilities as well in market.
Big job. Dion, would you like to introduce yourself to the audience?
Sure, Kate. Thanks. Dion Appel. I'm the current CEO of the Australian New Zealand Openpay business. I've been with the company now for just over 3.5 years. Was in the Chief Commercial Officer role and expanded the business into our markets in the UK and the US as well, and now landed the CEO role for the region. So going a lot deeper locally here in Australia and New Zealand. Still have group Chief Commercial Officer responsibilities, which means more along global partnerships. So it's a fast-paced industry, and we've been on quite the journey. So happy and look forward to talking through that with other peers on the panel.
And finally, Myles.
Yeah, hi, I'm Myles Redward, co-founder and joint CEO of Payright. We're an emerging player, I guess, within the buy now, pay later sector, and looking forward to a robust discussion with the group today.
Let's jump into it. So what I wanted to start off with, we're obviously seeing a lot of growth in the buy now, pay later space. Over the last few years, we've seen buy now, pay later really changing the market, really taking off. Our data at RFI shows where over a third of consumers who've had an experience using buy now, pay later. So what I thought we'd do to set the scene for the discussion today is, what customer problem do you think buy now, pay later is solving that traditional payments products don't or didn't? Why have we seen buy now, pay later take off to the extent that it has in Australia? And why don't we start with you, Dion, from a buy now, pay later perspective? What do you think that Openpay and other providers in the market are doing that is different to what other previous products have done?
Yeah, look, I think we're, as a starting point, going through like a fundamental change in consumer behaviour. So this is kind of like the macro theme that's taking place here, and behaviour change really in a focus in attitudes towards debt largely. So what we're seeing is a huge inflow of a generation that has probably seen previous generations up to their eyeballs in debt, starting to look at smarter ways to pay and ultimately aligning the payments with the way that they earn their income. And so being able to split payments and manage their cash flow a little bit better over time is something that buy now, pay later has pretty much invented and been able to champion through all forms of consumerism now, whether in retail and in also other verticals like automotive, home improvement, healthcare, membership, sports, entertainment. There's a whole range. It's pretty much ubiquitous now in terms of where you can use buy now, pay later. So attitudes towards debt, the ability to spread payments over time using your cash flow, which gives you better management, is why we're seeing not just a trend or a fad here, but actually a new way to pay, a smarter way to pay, and something that consumers have adopted as you showed by your stat in the masses.
Yeah, I couldn't agree more. I think all of our data also suggests a really significant shift in how consumers think about debt, and whether that's driven by buy now, pay later, I'd probably argue that was something that buy now, pay later just took advantage of, but a big shift in consumer behaviour. Yeah. Myles, what do you see from a Payright perspective? Would you agree with Dion's assessment then?
Yeah, look, absolutely, completely agree with those comments. We've obviously seen a real explosion in demand for pay over time. Point of sale offerings in recent years, buy now, pay later as a category and as a concept continues to gain awareness and usage really, which obviously extends increasingly beyond are the millennial demographic. We're seeing an increasing societal trend really for customers looking to spread the cost of living. And people really like the simplicity and the transparency, I think, associated with buy now, pay later. You've got a defined start date, a defined end date with regular manageable repayments and instalments throughout that repayment period, and very clear transparency around fees, if indeed there are any. It helps people, I think, feel in control of their finances. And we regularly hear the feedback, and you've made the point, you know, there's a number of growing number of survey results and market reports that would also suggest that buy now, pay later helps customers, I guess, understand and manage what they spend and what they owe. They're using it as a budgeting tool, they're using it as a cash flow management tool. And I think people really like the technology that we see associated with buy now, pay later in terms of not just making repayments and purchases at the point of sale that a lot of the traditional payment products don't provide.
I think that theme of control comes through quite a lot in our research as well. It gives customers more control over their money. Surin, from a Mastercard perspective, obviously in both camps really, in terms of buy now, pay later and also more traditional credit products, but what's your take on why buy now, pay later has been so successful in the Australian market?
Yeah, I think we've covered a number of the different themes, including, you know, security, control, transparency. I think it ultimately comes down to how consumers ultimately want to make their payment and what their first foray into any type of a credit product might be. And, you know, for some of us on the call, that may have been in a traditional credit card where we would access the money and access funding in that standpoint. And for the new and emerging groups that are coming through across different transaction sizes and different verticals like Dion had referenced before, I think there's always going to be another form factor, payment method, checkout option that will be available that would suit, you know, the consumer's needs. And then ultimately we have to think about how the retailer or the digital partner or the merchant sees and demonstrates value there as well. And I think we talked a little bit, you know, earlier around, you know, things like conversion, things like, you know, increasing basket size, you know, increasing that marketing angle around driving consumers to that retailer as well. And we're obviously been a huge fan of buy now, pay later for a long time, and we've been on the journey for a number of years now, supporting a number of key players, you know, really get to market. And I think that we should ultimately just try to provide consumer choice, and that could be buy now, pay later today, and it could be another form factor or another payment method or payment option tomorrow.
And we'll definitely come back to that idea of where does credit fit in versus buy now, pay later. I think an interesting point you made there was that, you know, maybe buy now, pay later is a customer's first foray into credit. I think increasingly that's what we're going to be coming up against. So yeah, great points. And we'll definitely come back to the credit piece. The other sort of key theme I wanted to touch on before we do start to talk more about how buy now, pay later impacts credit is the other trend that we're starting to see in our data is this rise in customers using multiple buy now, pay later services. Our data shows that 50% of buy now, pay later users have actually used more than one service. So that sort of points to, you know, some of it is maybe just trying the different options out there. Some of it is maybe different services meet different needs. I'm curious to get your thoughts on this. And Myles, I might start with you, because Payright is obviously playing in a more specific niche, perhaps compared to, or a different niche, I should say, compared to some of the other providers in the market. So do you see Payright as a product that maybe complements other buy now, pay later services rather than competing with them?
Yeah, absolutely. I think that is absolutely the case. And, you know, you're quite right. We have a point of difference in the market being that we typically operate a higher price point buy now, pay later product. So rather than competing with the micro ticket end of the market, I'll use that word, the sub $1,000, that 4 equal installment model. Our product sits well alongside and really complements a merchant's offering that might already have one of, again, micro ticket buy now, pay later providers already embedded. I think also being higher price point, it does lend itself to, I guess, a wider range of industry types and a more diversified merchant mix. And we know that the buy now, pay later traditionally, or historically anyway, been seen as a retail point of sale offering, and retail's a rapidly and important and rapidly growing vertical for us. But equally, being higher price point, our product extends well beyond retail to other core sectors and verticals like home improvement, education, aftermarket automotive as well, photography and even education. So it is quite distinctly different. And like I say, rather than competing with the micro ticket end of the market, our product really complements a merchant's offering that might already have one of those micro ticket providers already embedded.
And Dion, for Openpay, that multi-buy now pay later use, is that presenting a challenge for you? Would you see it as an opportunity?
Yeah, look, I think from our perspective, and we look at Openpay as a payment type, right? So like you shouldn't be restricted whether you want to go and spend $150 in retail, or whether you want to go and spend $15,000 on some pretty awesome dental work. I mean, for us, we have one customer experience, whether you're spending in a shorter term repayment plan right through to the longer term. This is a uniqueness that our organisation and our function delivers. But ultimately, Surin will give you the stats, but the average Australian has more than one credit card, just like the average Australian will have more than one buy now, pay later. We're seeing, as I mentioned before, this actual change in customer behaviour and including the payment types that they're using. So, we look at a few things here. We look at, obviously there's, this, massive, competitive battle in the pay in four space. It's probably given rise to the popularity of buy now, pay later because it's very easy to understand and it's a great way to enter, which we offer as well. But then once you sort of learn how it works and the simplicity, the transparency, the things that we've spoken about before, then to be able to sort of extend yourself to, use it in other verticals that might, have average transaction values $500 or $600, which is starting to edge out of just traditional retail. And the product can actually deliver on that as well. What we're seeing is over 90% of our sort of customers are, using it multiply and concurrently. So, like you would a credit card have multiple transactions, similar sorts of things and behaviours we're seeing within Openpay. So I think that as any industry evolves, there's a starting point and then, there's an evolution, and the evolution will be, more ubiquity across verticals, more flexibility in product, the ability to use it in multiple, in multiple transaction instances. And that's what we're set up for. And that's what we're starting to see the value with.
It's a great point that as the market matures, the way customers are going to use these services is also going to change. We've spent a fair bit of time looking at why customers use different services and also that point around the price point. And what we've found is that as customers have become more comfortable using the likes of Afterpay, their comfort using buy now, pay later at a higher price point also goes up because they, as you said, they understand how the model works and they understand the utility of it in different scenarios.
That's right. And I think Myles as well mentioned this notion of transparency that I think Surin also acknowledged. And, when you have fixed repayment amounts, if there are fees involved, obviously on the pay in four or those like type products, it's very much on the merchant that pays, not the consumer. But as you start to move into more flexibility, larger lens, longer periods of time, to have a fixed repayment fee as opposed to, minimum repayments with interest-bearing balloon payments at the end, that's where the confusion starts to come into the market, and that's where customer adoption starts to drop off a little bit. Australians, we're pretty savvy financially, but our literacy probably requires a little bit more help. So if we can actually do what Myles said before and put people on fixed repayments, and provided the income is there to support the repayments, you start good, you finish good. It makes it very easy for everybody and takes that pain point out of thinking about what are the actual repayments I need to make versus minimum versus maximum to get the interest-free periods. None of that exists with a product like Openpay. It's very much around equal repayments over the duration of the plan, start good, finish good, and transact.
And I think that conversation sort of neatly brings us on to how buy now, pay later is impacting on credit. Because we're seeing consumers using multiple buy now services, buy now, pay later services. We're seeing this evolution in the market. What does that mean for credit? I think buy now, pay later is often accused of displacing credit. I'd be keen to get your thoughts on that. And Surin, we'll start with you. Given Mastercard, as I said, been in sort of both foot in both camps. Do you think that buy now, pay later is complementary to credit cards, or do you see it as something that is maybe displacing credit and driving customers away from credit cards?
Yeah, I think that maybe just to touch on that last point that Dion made, and then I'll talk a little bit about our views on credit and and just different payment options within buy now, pay later. We see the market really fragmented still in regards to a number of buy now, pay laters providing capability, but it's largely driven by what's the average transaction size and what the length of the payment is. And I think that's a really important piece to articulate. And I think Myles might have referenced that $100, $150 price point that we traditionally see in kind of clothing retail, and that's typically where the buy now, pay later space is kind of entered into. But then up through to the dental work analogy that Dion mentioned, or you could think about it as solar panels and requesting charges for your new electric car. And so those price points then change the behaviour of how consumers think about what would be the financing arm of that particular purchase, and then how they would then think about is there optionality from the existing buy now, pay later providers as well. So the way I would think about it is that we always ultimately think about consumer choice, and I think that we have seen the market really sway more towards debit and debit cards volume, and we've traditionally seen that increase in debit card volume as well. Probably the key point to articulate though, Kate, is that we're still seeing that a large proportion of the buy now, pay laters are still funded by either a debit or a credit card. And predominantly it's about 80% debit and about 20% credit. And I think it just fundamentally, it really sways or preferences depending on, again, that vertical, the average transaction size, and then the length of the payment as well. So we think, credit will kind of stabilise and normalise, and there'll be a continued explosion in debit that we continue to see as well. And then really thinking about what is that funding source behind that buy now, pay later product still continues to be preference on card.
Yes, the funding source is an interesting one, because I think we spend a lot of time talking about buy now, pay later displacing card payments, but of course there's a funding source behind it. And what our research actually shows is that most of the time customers are just choosing their most used card overall. So the fact that buy now, pay later skews so young, there's always going to be a debit card element to it.
I was just going to build on that really, because there is this, I suppose, this notion that it does skew younger. When we look at our verticals, we've actually got, healthcare, we've got home improvement, we've got automotive. So we call our sort of traditionally non-retail verticals, and we're seeing our average age sort of up 39 into the 40s, and we're still seeing proof that Surin's example of 80% plus using debit cards still applies even in those categories as well. So it comes back to the original point about cash flow management, right? And not and those attitudes towards debt changing. And people know, even if they're used to using credit cards and getting into that kind of level of debt, it still has a bit of a dark cloud over their head. So if there are smarter ways to do it and use your still using your Mastercard debit card, you're still being able to transact, still being able to do what you do, but you're using with positive cash balances, then it's ticking all of the boxes really. And that's why you're seeing such a big number of customers using their debit cards to be able to repay, that management of cash flow.
Yeah, I'll just add to what Dion said. I mean, there is, and not the panelists today, but there is buy now, pay later organisations that are global now that fundamentally focus on consumers that have unutilised credit limits. And how do we then utilise that in a more smarter way, or in fundamentally in a cash flow positive way from an instalment perspective? And so I think that it basically kind of comes back to the points that we made around what is that tenure? Are we responsibly lending credit, and is there an opportunity to then leverage that in a cash flow positive way, where the consumer still feels that they're always in control?
And Myles, given that Payright is operating at that higher value price point, how do you think about credit? Do you consider Payright competing with credit? Is it not something that you have to worry about?
I think that's true to a degree. Equally, buy now, pay later, I think can play what is described as a complementary role and sit alongside traditional forms of credit, whether that be at the point of sale or direct to consumer offerings like personal loans, for example. We've obviously seen significantly growing awareness and adoption of buy now, pay later, again, on bigger ticket items, as we've spoken about, on larger purchases, which is, of course, where Payright specialise. We do extend credit right up to $20,000 and offer terms up to 5 years in certain sectors like home improvement we've spoken a little bit about. And so arguably, I guess, an alternative or traditional means of financing, using Surin's example earlier of a solar panel installation, for example, or a new deck or new fence, or any form of home improvement or higher price purchase. It might be a personal loan or an extension of a mortgage. But again, I think it comes back to an increasing customer preference for what's a very simple and transparent payment plan that buy now, pay later offers. And equally, or perhaps more so, it's a product of the accessibility in many ways of buy now, pay later compared to traditional forms of credit. The merchant can offer it as a payment method at the point of sale. So rather than the customer having to, I guess, proactively go out there and seek a personal loan product, for example. And the other piece of feedback we regularly hear from customers in the market, I guess, more broadly, is that given that the buy now, pay later is typically being offered or provided through what is a known and trusted retailer or trusted merchant, it provides that same level of confidence and trust in the buy now, pay later provider, which is obviously increasingly important in any form of consumer lending, and whether that be established or an emerging player. And I also think we touched on it before earlier that people like the technology that we're seeing associated with buy now, pay later in terms of the real-time credit assessment, real-time decisioning, quick, slick application process at the point of sale, and of course those ease of making repayments. And just briefly on the credit cards as a traditional form of credit, I saw a stat the other day that something like 50% of buy now, pay later customers don't have access to a credit card, and closer to 80% of customers feel that the buy now, pay later is actually more accessible than credit cards for all the reasons we've spoken about, which are obviously a major, I think, contributing factor to that decline we're seeing in credit card usage in recent years, and that customer preference continues to shift more away, or more towards, I should say, that we've spoken about that simplicity, transparency, and again, accessibility of buy now, pay later.
Yeah, I mean, and the other thing I'll add to that, Myles, is the view is that buy now, pay later is not necessarily a new thing. Like, we've had lay-by for a long time. We've had financing at to buy your television or your items at like sofas and so forth for a long time now. And I think the way that we're showing up as an industry is fundamentally stronger from Myles and Dion's examples around the accessibility, the onboarding experience, the transparency experience, the notifications. And so I think this is the next iteration of credit that continues to come through. But I think that there's always going to be from our view, also, there's always going to be a place for credit and different credit products as well. Myles' example on home improvement, you'd start to see then a shift from things like personal lending as well, or personal loans, or withdrawals from your home loan, for example, to make those purchases now being potentially replaced by the buy now, pay later sector. So our views is that this is going to be an ongoing, ongoing kind of competitive, product placement view, and ultimately the consumer will ultimately win. And I think that's a great place for us all to be in.
I think it's interesting the market has evolved to this point that we now think of buy now, pay later as just like another credit product. And a few years ago, we definitely wouldn't have been talking about it in this way, but I think it just goes to how mature the market has become. And I think we're starting to see that globally as well. This idea of buy now, pay later isn't just you pay $100 back in 4 installments. It's a lot of different things. There's
still lots of spaces if you think about a consumer's traditional spend and spend pattern that buy now, pay later still doesn't necessarily play into. And I think that that's why the opportunity and the opportunity size for Myles and Dion's businesses are so vast and so large, because we're only really touching on such a small fraction of the overall expenditure. And we're still thinking about this in a scenario of how much of retail spend or how much of clothing retail spend actually takes place on buy now, pay later. But if you unpack the consumer's wallet, there's so much more that takes place. There's council bills, there's strata payments, there's telco payments. There's a number of kind of verticals that are still completely untouched, or only represent a very, very small proportion of overall payment option spend in that particular vertical in buy now, pay later. And so we see that a huge runway, for Myles and Dion and other organisations in this space as well. Sorry,
yeah.
Dion.
I was gonna pretty much sort of support exactly that. This is, buy now, pay later is not a company. It's it's a range of products that are actually fueling industry around payments, right? And so there are multiple different types of payments, and coming at it from a consumer perspective, giving choice, giving accessibility, leveraging technology to be able to do it. There are very traditional ways of being able to lend money. And we've been able to take what would be sort of quite old and clunky ways of deferred payments and really modernised it using technology that's better for the consumer, better for the merchant, and better for the industry. And one of the uniquenesses that's come out of that is a payments business, a payments industry in buy now, pay later, where we have a relationship with the consumer and with the merchant. And that's really where there's probably been a bit of a fundamental shift in terms of the way that things have been done traditionally. And that puts, the industry in, quite a powerful position in terms of understanding and putting the customer at the center of everything, single view of customer, access to data, and ultimately enabling that transaction between customer and merchant to be, far more streamlined. And with that comes great opportunity. And that's ultimately what's helping shape this beyond, traditional forms of payments that have shaped the past.
And talking about the customer, the other question I wanted to get your thoughts on, there's obviously always a lot of negative media attention around buy now, pay later, and this perception of buy now, pay later as being causing overspending or bad for customers, and even just consumer fear around, talking about having a credit card attached to buy now, pay later, the idea that that's stacking debt. And we definitely see it coming through in our research around customers having these concerns that are really driven by the media in a lot of instances, but that has become a key topic at the moment. How do buy now, pay later providers make sure that there's protection for vulnerable customers, that customers are using these products correctly? Myles and Dion, anything you can add there in terms of how you're approaching this issue internally?
Yeah, look, I mean, it's obviously a key focus for us at Payright and the sector more broadly. It's a key feature and theme of the Buy Now, Pay Later Code of Conduct, of course, that was launched at the beginning of this year. As with any high growth sector, there's always going to be increased regulatory focus, and we're seeing that at the moment with very much through the lens of customer hardship and that propensity for detriment or harm. And again, for all those reasons, we're equally very focused on that. We do put all our applicants through a robust credit assessment process, not just to assess credit and credit risk, but equally to look at and consider that propensity for hardship or detriment or harm. We consider a range of affordability type measures, so serviceability and capacity to pay. We do credit checks. We ID verify all our applicants. We scrape bank statement data where appropriate to do so. Again, very much through that lens of customer hardship. We're very focused on making sure that our lending practices are appropriate, obviously, for our customers, and we've worked collectively as an industry, really as a sector more broadly, really hard on finding the right balance between obviously that potential for more recently COVID impacted customer hardship and of course appropriate collections and arrears management practices, again to ensure that we're maintaining that right balance, not just between obviously the quality and the performance of the book, but equally to ensure that we've got the right outcomes and the appropriate outcomes for customers, which includes, again, a lot of things we've spoken about, that transparency around fee structures and really robust customer hardship and dispute resolution processes and practices. These are very much the core foundations of the business and the sector. And as I mentioned, we're also, as our Openpay, a founding member of the Buy Now, Pay Later Code of Conduct, which is equally very focused on ensuring those lending practices are very focused on minimising customer hardship.
Yeah, I think that's right, Myles. And I think for me, it comes down to three things. I think, education's really important. I think that, this is a really new sector, all things considered, some, 6 to 8 years old, if you're sort of, really, tracking it back to the early days. So education and providing media, consumers, industry, with how it works, why consumers are adopting it the way that they're adopting it. That I think is a very big part of, gaining further depths of understanding about the why. I also think that, building on what Myles is saying as a second point, lending money is a responsibility. So we need to take it upon ourselves to responsibly lend and go about that in a manner that, that does go over and above what we have to do at a minimum. And that is because we are a self-regulated industry, and with AFIA and the code that Myles spoke to, it's really important that we do look at that, we do adopt it, we do lead from it, and we do go over and above it. And as a business, we're very confident that we tick all of those boxes and continue to share data to help shape this industry, because it's not going to go anywhere. It's only going to get bigger. And to Surin's point before, there's so many more areas that this can really grow into, and it's on us to help shape that in a way that's that's meaningful and responsible.
And switching gears slightly, I want to talk a little bit about some of the changes we're seeing in the market and the future of buy now, pay later to finish off. We've obviously seen a number of new providers entering the market over the last couple of years, but I think in the last few months, we've seen StepPay, we've seen PayPal Pay in Full, we've seen Citi's spot proposition. So it's becoming an increasingly crowded market. So curious to get your thoughts on that. But Surin, why don't we start with how StepPay is going to shake up the market? What are your thoughts on how it's going to have an impact, having buy now, pay later offered by the biggest bank in Australia in the market, competing with maybe more traditional buy now, pay later providers?
Yeah, well, thanks, Kate. I mean, firstly, I think CBA are a great innovative partner, and they do a number of really unique digital kind of experiences for their consumers, and this is just really an extension of what they're looking to do. They're offering the capability in the product to millions of consumers, and fundamentally another convenience kind of capability and choice and payment option choice that they're providing as part of their product. And that's been growing very steadily, and I congratulate the team at CBA, for their work there as well. The view ultimately is that there, as we talked about, there is lots of fragmentation in the market, and there's lots of views from different digital partners, wallet providers that are moving into the space. We've got traditional banks that are in the space as well, and ultimately they're all fundamentally looking at how do we continue to drive value. And how do we continue to drive preference in our experience? And Dion mentioned that experience around uniquely being placed as part of the marketplace between the consumer and that merchant or retailer, and that's part of what everyone is ultimately looking to strive towards, is really connecting the consumer and that merchant together to drive ultimate value. And on the consumer side, to your point about CBA, they have a huge and a significantly large consumer base, and that ultimately then can be driven with other value adds, that may come in the future as well, to then demonstrate value back to the merchant community. And I think Dion talked about leveraging things like data and data analytics to provide what that upside is, how they're really trying to drive incremental spend or incremental transaction sizes, or increased velocity, or re-engage previous customers that potentially hadn't shopped to that merchant or is shopping at that merchant in the future as well. So our view really at Mastercard is that we continue to provide technology and capability, and that could be through fraud, that could be through cybersecurity, could be issuer processing, it could be the carded products that you rightfully said, which StepPay and Spot leverage from Mastercard, and we want to think about ourselves as a technology partner and enabler to the buy now, pay later sector, and that's part of some of the announcements that we've made in the market as well, both internationally and locally as well.
Yeah.
Oh, sorry, go on, Dion.
I was just going to say, I agree. I think it's been a bit of a wake-up call for the banks, in my honest opinion. I think, we're pure play buy now, pay later businesses, really shaping the industry. It's our core business. So we will always innovate. We will always differentiate. It's why these businesses are just coming into the market sort of in the last couple of years, because, they've seen big, some big tickets being written in an emerging space that they probably didn't have their eye on the ball of, or they did, but probably didn't move fast enough. So they can move fast. We're seeing that, and that's exciting. But I think more so, we've got businesses in Australia, we've got business in the UK, in the US. We're able to sort of have like a central core product that we can sort of grow into other markets, at scale and at pace. And I think that that's what's really exciting. And you kind of got your big banks that can go really deep in certain markets. Our nimbleness and agility to be able to scale into verticals, into other markets, being pure play. I think that that's where there's a real point of difference, and working with technologies like your Mastercards to enable that. That's what's pretty exciting, because they're global businesses too that have got rails all over the world.
Yeah, no, look, just quickly for me, and I absolutely agree with all those points made. And we spoke about it before in the context of a high growth sector attracting regulatory focus, but equally it's going to attract more and more players, and we're seeing that now with a lot of big names really piling into the space. But as I'm seeing it, in almost all cases, they're looking to compete once again with that 4 equal installment type model, that sub $1,000, that micro ticket end of the market. So again, I think it's going to increase the level of congestion in the sub $1,000 end of the market. I think perhaps to a lesser extent, it's likely to have an impact on the higher price point end of the market, which again is where Payright and to a degree Openpay specialise as well.
Yeah, and what I was thinking, listening to you all talk about the opportunities that exist in this space and the growth that is possible in this space, maybe do you think these new products are going into the wrong part of this space if they're going in and competing in that sub $1,000, where there is already a lot of providers in that space? Should maybe new entrants be looking at opportunities that are at a higher value point or in new verticals?
I think that, sorry, Dean, just to jump in very quick. I mean, I think inevitably that will happen, of course, and I think that the high price point end of the market is really where the micro ticket end of the market was 3 or 4 years ago, largely in its infancy and really ready to explode. And, with that, clearly we're going to see more and more pile in. It's hard to argue with the growth we're seeing still in the sub $1,000 end of the market. So logically, that is the natural place to, for the big players, some of these big international global brands to focus their attention. But inevitably, I think as our niche continues to grow and likewise Openpay, I think we will inevitably see more and more pile in. I feel we're in a good position, having broadly first mover advantage there.
There are big nuances that can enable you to play in the smaller ticket versus the bigger ticket. The construct of the product, the platform, everything. It's the funding behind it. There are some uniquenesses that enable that differentiation, and you need to kind of be committed to innovation and differentiation to be able to deliver on that. And I think that a lot of the clutter in the pay in 4 space is because that's where a lot of the noise is being made, and your attention gets distracted by where the noise is, right? And so the opportunity to innovate and differentiate is what's going to enable you to win, long term. So that's kind of our lens on it. We still offer the pay in 4, by the way. So, we can have the best of both worlds with the way that we've stacked our tech.
And what I'll finish on, Surin and Dion, you both mentioned global growth, and I'd be curious as to get both of your thoughts, given that you're in multiple markets. Is there a market that you think is really primed for buy now, pay later to really take off? We've obviously seen it just explode here in Australia. We're starting to see it pick up in markets like the UK. Is there a market that you look at and think that's the next big buy now, pay later market?
Yeah, I'm happy to go first, Dion, if you like. I just make one last comment, Kate, on the previous chat was you talked about new entrants. I think there's an opportunity also for entrants that haven't potentially participated in this space, but have large consumer bases. And that's what we're starting to see, in other parts of the world where a traditional loyalty platform or a traditional, large digital, platform or large marketplace may not have really ever, joined kind of any type of financial capability or financial space, but are thinking about this as a value add for their consumers, as either a revenue line or a value added service or an extension of their product as well. And I'll talk a little bit more about that in a moment. But to answer the question on the growth and the growth markets, I mean, we've seen some phenomenal growth across the UK, North America, obviously Australia as well. We made some announcements recently about launching Mastercard installments, and the 3 markets that we'll launch in will actually be North America, the UK, and Australia. So you can see where some of our focus is on. But then there's such a vast opportunity across Asia as well, and we're seeing a large number of the digital platforms and players moving into that space as an extension of their capability. But if you also look at where some of the large international global players have stemmed from, they've actually started in Europe as well, and have expanded across the European horizon, and now entering either our market in Australia or also the North America market. The piece that I think is interesting to note though, outside all the key markets that we just talked about, is the South American market. This has been in play for a number of years now, and installments isn't something that is new to for example, to the Brazilian community. The difference though is the economics and who actually runs that capability is different. We've traditionally seen that as a buy now, pay later experience in those markets. Actually, the acquiring community and the acquirers are actually at the forefront of the capability as well. And also consumers actually understand that when they buy almost anything, including cross-border transactions or international payments, all of those transactions automatically become part of an installment. And so I think that, whilst we look at where the traditional, global players are moving towards, and even where Mastercard's moving towards, there is a foray of markets across AP and South America that this has been in the market for a number of years. And it's just part of it's part of kind of the day-to-day payment infrastructure and what the consumers expect as well. Phil?
Yeah, that's insightful. Great to hear your point on that. I think from our perspective, firstly, let's pause and just acknowledge that Australia has actually created something quite powerful in buy now, pay later as an invention, or an evolution, as I said before, in fintech, and we're in a strong position to ship it to the world. The ASX has got listed buy now, pay later that don't even operate in Australia, but understand the sophistication of this market here, and its understanding, its adoption, its knowledge, and take up of buy now, pay later. So I think that puts us really in a position of power to be able to look at other markets where the market fit is right, the product fit is right, the opportunity to understand the cultural differences and the regulatory differences, and see what actually does match that of Australia, because they're the markets that are ultimately going to be able to give you that rapid adoption. We operate in the UK, imminently in the US, and the opportunity beyond that, obviously, as time will tell. But for us, it's definitely a global play, and we've seen that adoption. The markets that Surin talking about overlap with the markets that we're committed to as well, and I'm sure that there's many more to come in the future for the industry.
Yeah, it feels like from a research perspective, we're being asked about every market possible at the moment. So there's obviously a lot happening globally as well. I think from the discussion today, what I've taken is there's a lot of opportunity that still exists, lots that we're going to see change over the next couple of years. I find buy now, pay later a really interesting space. So it's good to know there's so much happening. It's going to continue to be an interesting space for all of us to be in. Thank you so much for your time today. Really enjoyed the discussion with you all.
Thanks, Kate.
Sounds good. Thank you.
Thank you, Kate.